So as you guys know, Microsoft has been my number one largest stock in my entire portfolio for a pretty long time now. And so right along with stocks like Amazon or Disney, Microsoft is a huge foundational stock for me that I really tried to build my entire portfolio around. But the thing about Microsoft is that it's not only a huge foundational stock for me, but it's also my largest dividend growth stock in terms of how much money I have invested in it. And so naturally, I always receive a lot of comments asking me why I chose Microsoft over other candidates, like for example, Apple stock, which has clearly been one of the best investments that you could have made in recent history, just like Microsoft. They're also a gigantic and pretty reliable company, just like Microsoft, and they also pay a growing dividend that is likely to get bigger and bigger in the future, again, just like Microsoft. So in today's video, I want to take an objective look at the two stocks to see which one is the better long-term dividend growth investment, and as we go through, I'll be awarding 1 point to either stock for different things that we look at. But don't focus too much on the points. It's really just for a way for us to remember which stock performed a little bit better in each category as we work our way through to the end of the video. Should be a fun video though, and if you guys want me to do more comparisons like this, make sure you let me know down in the comment sections which stocks you'd like me to compare. Just try to make them like popular stocks so that people actually watch them, but I'd be more than happy to do that for you guys if you want me to. But with all that said, we got a lot to cover today, so let's just go ahead and start by taking a look at their stocks and their valuations, and then we'll take a closer look at their businesses and their balance sheets to see which has the more sustainable dividend for long-term growth, and then we'll finish everything up with their respective dividends, and I'll give my overall conclusion. And by the way, if you don't know anything about dividend growth investing, I recently made a video on the entire subject, and it was a really fun video and a lot of people enjoyed it. So I'll have it linked for you up here and down in the description if you want to check it out and learn more about dividend growth investing. Okay, now taking a look at their stocks, both stocks are actually trading very close to record highs at the moment, with Microsoft mostly having a smooth upward trending line over the past 5 years, climbing by over 200% and is still up close to 50% in 2019 as well. Apple is pretty similar to this, except that they've seen some bigger dips and a slightly flatter trend than Microsoft, as they've only climbed by 126% in the past 5 years, again versus Microsoft at over 200%, but their performance in 2019 has been better at over 65%. I care more about the long-term stability though, so I think Microsoft takes the advantage here thanks to their amazing long-term performance with rarely any dips. So we'll start things off with Microsoft taking the lead, 1.20. Now, when looking at valuations, Microsoft is more expensive on both a trailing and forward PE basis by a pretty considerable amount too. Although their PEG ratio is a bit lower than Apple, but PEG ratios are notorious for sometimes being off because of how difficult it is to predict 5 years out into the future. On the other hand, as dividend growth investors, it's really the longer term picture that we care about, so with valuations, it's really a toss-up between the two. But because the trailing and forward PE ratios are likely to be the most accurate, and considering that Apple's forward PE ratio is so much lower than Microsoft by about 7 whole points, we'll have to give the point here to Apple as a result, which leaves the two stocks now tied with 1 point each. Okay, now it's time to take a look at their business performance. Well, when looking at sales, it's true that Apple brings in around double the revenue of Microsoft, but for dividend growth investing, I would argue that higher and more stable growth is more important, and that's where Microsoft really outshines Apple, as Apple had a rough fiscal 2019, actually seeing their sales drop because of weaker smartphone demand, which we'll also take a look at in just a second, whereas Microsoft has steadily grown every year in recent history. In fact, if we convert these numbers into growth percentages, we can see that Microsoft has completely outperformed Apple and is expected to continue doing so even into the future. So we'll go ahead and give 1 point here to Microsoft, putting them ahead of Apple 2 points to 1. Of course, we know that for dividends though, profits are just as important as sales, because it's really how much of those sales you can convert into profits that allows you to pay more money out to your shareholders. Now, both companies are insanely profitable, and and I don't have any reason to think that this will stop being the case anytime soon. But when looking at free cash flow, the story is pretty much the same as their sales. Yes, Apple does generate a lot more in profits, but they've also been much more inconsistent, actually declining in 2 of the last 3 years, while Microsoft has actually grown in every single one. Now, Yahoo Finance doesn't give future estimates for free cash flow, but they do give EPS estimates, and here we can see that Microsoft's growth is expected to be much higher this year by about 4 percentage points, then be lower by about 2 percentage points the year after, but still average close to 5 points more over the next 5 years. So while Apple is a more profitable company, Microsoft is the one seeing the higher and more consistent growth. So we'll give another point here to Microsoft for profitability, furthering their lead to now 3 points down to 1 for Apple. Okay, now another thing that is important for dividend growth investing is the strength of the underlying business, because it's going to be difficult to keep growing out that dividend if you don't have a strong brand, sell products that are in high demand, and also have a little diversity so that you're not just a one-trick pony. If you have increased competition that is really hurting your sales, it's important to have other parts of your business that can help you stay afloat and give you some time to figure out ways to evolve and adapt your business to fight off that competition and keep growing. So let's take a look at that now. Well, in my opinion, Microsoft outshines Apple once again in this category. Don't get me wrong, Apple has an iconic brand and some of the strongest brand loyalty that I think I've ever seen in my life. And if you don't believe me, try convincing an iPhone user to switch over to Android and then have fun getting yelled at for like half an hour. And I know that from personal experience with my girlfriend. But while Apple does in fact have several parts to their business, including growth in services and wearables, strong sales in iPads and MacBooks, and even seems to be venturing into new areas like autonomous driving, although we really have no idea what their plans are in that space, I would argue that they are too heavily reliant on iPhone sales. In fact, their iPhone products alone make up more than half of their entire business. Now, you may think that this is a good thing given how much people love iPhones, and I would mostly agree with you considering that we are right around the corner from seeing a 5G version of an iPhone that should provide them with some much needed growth, but at the same time, when those sales are weak, it can really hurt them. For example, this past year, they blamed their drop in revenue almost entirely on weak iPhone sales, which happened to plummet by 14% year over year. That's why I argue that diversity in your business is so important. And that's exactly what Microsoft has. Not only do they have the most used computer operating system in the entire world with Windows, but they do a great job of selling a number of other services, including Microsoft Office. They own the largest professional networking sites with LinkedIn. They own the equivalent for coders and programmers in GitHub. They have the second largest cloud platform in the world with Azure. They even have a huge presence in gaming with Xbox and even Windows, since gaming PCs do run on Windows. And they're even investing heavily in many other areas, including artificial intelligence. And I won't bore you with the revenue growth of each business this past year, but a few highlights include commercial cloud at 43%, LinkedIn at 28%, Azure at 72%, gaming at 10%, and even Surface grew at 23%. So clearly this is a well-diversified company that also has a very strong brand and dominant presence in their respective markets. And overall, they just really seem to be on fire right now. So I'll have to give them a point here as well, which puts them ahead of Apple 4 points to 1. Okay, now clearly both companies have very strong businesses and brands, but how has that translated to their balance sheets? After all, it's difficult to sustain a high growth dividend if you don't have a healthy balance sheet to lean on. So let's take a look at their balance sheets right now. Well, when looking at Microsoft, they have what I call an elite level balance sheet. You're talking $137 billion of cash, close to 3 times the current assets over current liabilities, and about 1.6 times more total assets than total liabilities, meaning that Microsoft is set up extremely well to not only handle any downturns in the economy, but they also have all the funds they need to make strategic acquisitions and investments to fuel even more growth in the future, which is very important for dividend growth investing. Apple, on the other hand, also has an incredibly strong balance sheet with over $100 billion in cash, but they have both a worse current and total ratio than Microsoft. And to be honest, what I care the most about is whether a company can cover both their current liabilities and their long-term debts with just their current assets. And Apple, unfortunately, cannot do that, whereas Microsoft can. And they would still even have close to $50 billion left over even if they did that. So the point here clearly has to go to Microsoft again, giving them an even bigger lead of 5 points to 1. Now, it may look like Apple has already lost and has no chance of catching up as they are down 5 to 1, but because this is more of a dividend focused video, I'm actually going to award 4 points for the dividends separated by yield, payout ratio, growth rate, and growth history. So they can technically still tie with Microsoft if they win enough points, but let's go ahead and see how the two dividends compare and how it all plays out. Now, both companies currently have small yields, but again, for dividend growth investing, this isn't really the biggest concern for us. Still, Microsoft has a slightly higher yield right now at 1.37% versus Apple at 1.19%, so we'll give 1 point to Microsoft here. And that pretty much ruins Apple's chances, but we'll just continue anyway. Now, the payout ratio is very important for dividend growth investing because the lower the ratio is, the less the company is paying out in dividends at the moment, and that means that they have more room to keep increasing those dividends in the future. And here we can see that Apple has a significantly lower payout ratio, so we'll give a much needed point to Apple for this category. Next up is the growth rate, and here we're looking at the average for the past 5 years to see which company has been more committed to growing that dividend at a higher rate. And Microsoft takes another point here as they've increased their dividend at a slightly higher rate than Apple. And finally, we have the growth history, which tells us how many years each company has increased that dividend in a row up until today. And once again, Microsoft takes a point here as they've now increased their dividend for more than double the amount of years in a row that Apple has. And this brings us to a grand total of Microsoft at 8 points versus Apple at only 2 points, giving Microsoft the very clear win. But again, the points shouldn't really be the focus. Apple clearly has a much lower payout ratio, and I think many dividend growth investors would argue that that deserves more than just 1 point, not to mention that Apple also clearly has the more attractive valuation at this moment. But overall, when looking at the entire picture, I just think that investors will ultimately see better performance from investing in Microsoft over Apple over the long term if your priority is dividend growth investing. But that doesn't mean that the opposite can't happen or that both stocks aren't great investments in their own right. Many people actually choose to own both Microsoft and Apple and build their portfolios around them, and I really see no problem with that whatsoever. In fact, I actually helped set up, pretty much mostly set up my girlfriend's portfolio when she started investing, when I finally convinced her to start investing. And I chose Apple to be one of her core investments, actually one of her biggest stocks. And one of the reasons is because she's a huge Apple user, so I felt like she would understand their business more. But it was also because I just really feel like Apple is one of those solid companies. They have all the funds in the world to keep making acquisitions, keep fueling growth, and they'll find ways to adapt and over time not be so heavily reliant on just iPhone sales. And we're kind of seeing that with growth in services and different other areas that they're investing some of their money. So I kind of feel like I own both companies because Microsoft is my largest stock and then Apple is one of my girlfriend's largest stocks. And the last time I said that, a lot of you were laughing in the comment section because you kind of took it as if I was saying that, like, you know, I'm like controlling all of her stocks, or that like I'm overly possessive, like her money is my money. But that wasn't what I was trying to say. You guys know what I meant. And anyway, my girlfriend got all mad at me when she saw that video, but who cares? It's fine. She actually owes me a lot because her portfolio is performing like extremely well because of me. So anyway, she's gonna kill me when she sees this. Okay, so I hope you guys enjoyed the video, and if you did, make sure you hit the like button and let me know what you think about these two stocks down in the comment section as well. Let me know if you think either one of these two stocks is better than the other. Let me know if you own either, or if you plan to, or if you're just not interested in either one, even just at this time. And I'll try to respond to as many comments as I can. Thanks again for watching. Really means a lot to me. I'll catch you guys in the next one. Take care. Bye-bye.